Hey, what's up everyone? Welcome back to my world of stocks and welcome back to my new monthly update series where we talk about three specific topics. Number one, the current state of the stock market and how I feel about everything that's going on a more macro level. Number two, what stocks I've been buying and selling over the past month. And number three, what stocks I'm interested in buying over this next month, which of course is here August 2020. And if you guys want to jump to a specific part in the video, I'll go ahead and leave timestamps for you guys down below. All I ask is that you please hit the like button if you enjoy the video, as it really helps the channel and it means a lot to me. But with all that said, we got a lot to cover. So let's go ahead and start with part one, the current state of the stock market. And as you guys might expect, the market continues to be a mixed bag. Looking at the Dow Jones, it's about 12% down from its all-time high and a little less than 9% down year to date, which is definitely a nice little dip there, but it's not anything super special like what we saw earlier in the year. Meanwhile, the S&P 500 is near an all-time high and pretty much flat year to date, in large part due to the fact that Amazon, Apple, Google, Facebook, and Microsoft all make up over a fifth of the entire index. And of course, those tech stocks have been on fire, as in many ways they actually benefit from people being forced to stay home during the global health crisis. Speaking of which, that leaves us with the very tech-heavy NASDAQ that is not only trading at a record high, but is also up a massive 18% year to date, which is pretty crazy considering the current state of the economy. We just received another jobless claims report, and for the second straight week now, we've seen an increase in job losses at over 1.4 million, bringing our total since the entire duration of the whole crisis to 54 million. That's kind of just a counted total there. For context, during an 18-month period of the Great Recession, the highest total number was 37 million. So we've now eclipsed that number in just about a third of the time. Now, the good news is that those are just initial claims, and they've mostly been trending downward except for these last 2 weeks, but we are still extremely higher than the Great Recession, and even looking at continuing jobless claims, which gives us a better idea of who is still unemployed rather than just the initial claims, that number continues to be extremely elevated despite mostly trending down. It could be a sign of recovery, but it's still horrific to look at nonetheless. So for the markets to be trading as high as they are, it definitely feels like we're in at least a small to kind of medium-sized bubble. And the only reason that I don't call this a large bubble is because so much of this is due to the global health crisis, which could be gone by sometime next year, leading to the hope that we do see a sharp recovery as soon as it's taken care of and businesses aren't forced to close down anymore or operate at unsustainably small capacities. Now, on the health front, in a recent roundtable that discussed therapeutics, V-shots, and even plasma treatments, the FDA commissioner mentioned that they already have 6 shots in-house, with 2 of them already in phase 3 trials, which is of course the last phase before going to market, and another 1 shot going into phase 3 in August, with another 3 shots in other phases. Now, they also have another 4 shots that should be going into trials soon, while another 50 plus are in the pre-application process. So despite it being record-breaking time, it's actually looking fairly likely that a shot will be released before the end of the year, which could really help the economy start opening up again. On top of that, it does look like there is more financial help coming as well. Republicans recently started pushing for what they call the HEALS Act as an alternative to what the Democrats were pushing, known as the HEROES Act. Now, one of the differences is that the HEALS Act is worth around $1 trillion, while the HEROES Act was worth around $3 trillion, but they're both still obviously worth a lot of money, and everything is still kind of being negotiated. But at least one thing that both sides did agree on was that both bills called for new stimulus checks of at least $1,200 to be sent out to people. Now, the HEALS Act also pushes for enhanced unemployment benefits, since that $600 unemployment bonus is now ending, but they are cutting it down to $200, with plans to later ensure wages of around 70% of what they used to make. So they're kind of trying to, it's like they're trying to incentivize people to get back to work once work does kind of open back up. Now, my feelings on all of this kind of stimulus is pretty mixed, because on one hand, I don't necessarily mind spending money to help people that actually need the help. And, this is a really very, very rare type of crisis. Nobody was really expecting this to happen. So if we do need to spend some money here to kind of bridge the gap and just help us survive and get through to the other side, then I can understand that. On the other side, though, we've been already spending a ton of money, and I'm getting a little sick and tired of our only solutions being to print our way out of this. And the reason I don't like that is because I am really scared about what that means for our future when we're drowning in debt and we have to basically hyperinflate our way out of it. And that can really collapse the entire country. So those are things that really concern me about the future. I'm really hoping that we can avoid a scenario where we've got hyperinflation going on, which could be devastating. But without rambling on too much, the point that I'm trying to make is that I just really don't think that the markets should be trading as high as they are, considering everything that's going on. And with all the chaos still going on in the world, and also considering that this is still an election year, I just think that there is probably going to be some decent volatility to at least kind of finish out the year and maybe go into next year as well. So I am just being more cautious. I'm being more strategic with any of my moves. And my moves have been a lot smaller recently. I haven't been making any kind of big moves. And so out of my monthly investing budget, I think more than usual, some of that has been going to my cash portion of my portfolio, so that if there is any kind of big dips or anything like that, or any kind of volatility, then I can make some bigger moves with that money. But having said that, I am still making some moves, and I do still continue to buy stocks. So let's go ahead and transition now to part two, which is what did I buy and sell over the past month? And I didn't do a whole lot of moves, but I did make some small moves here and there. So let's go ahead and run through them really quick, and then we'll get to part three, what I'm looking forward to next month. Okay, well, starting with what I sold. Now, obviously, I don't normally sell stocks a lot because I do like to hold them long term, but occasionally I will trim a position a little, usually just to kind of balance out my portfolio and make it the way I want it. And this month I did decide to do just a tiny bit of that with my Disney position, which is a stock that I love for the long term, but I just wanted to slightly lower my exposure to it from 8% of my portfolio down to 7%, where I feel more comfortable holding it. Now, I sold that at around $118, which is right around the price that it's trading for today. And again, it's not that this is a bad price. It's actually down about 20% year to date, which would normally be a fantastic time to buy Disney stock when you get such a large dip like that. But with everything going on, I'm just not feeling really good about their business right now, and I don't want to be overly exposed to it. Many Disney resorts and parks are still closed down, including Disneyland in California, and even those that are open are at very limited capacity, not to mention that most movie theaters across the country are still essentially closed down as well, and that's going to equate to billions of dollars lost, because of course Disney is one of the leaders in the box office market. But going back to theme parks, some analysts estimate that their theme parks alone could be losing as much as $1 billion every single month that they stay closed. That's a lot of money, and that's a really big hit to swallow for a stock that still trades for a trailing P ratio of over 50 and a forward P ratio of almost 40. That's not a cheap stock by any means. Now, I happen to stick with them because that valuation is only temporary until things turn back around, and I also have huge hopes for what they're doing in digital streaming with Disney Plus, ESPN Plus, and Hulu, but I just don't want to be overly exposed to it. Okay, with that said, I did also buy a couple of stocks this last month, and to be honest, they were mostly just dividend plays so that I can collect some profits regardless of what the overall market is doing, and that involved a little bit more of AbbVie, which is the only biotech stock that I currently own, and that one currently yields about 5%, so a very nice dividend there. And then the other stock that I was buying, and this is what feels like I'm buying every month at this point, I did add a little bit more to my AT&T position as well, which currently yields over 7%. And I've already discussed both of these stocks in great detail in the past, so I won't regurgitate the same information here, but I did buy AbbVie at around $94 a share. That was with my E-Trade account, so it's a smaller position. I have my larger position in my Robinhood account, and then same exact thing with AT&T, and I bought that one on my E-Trade, and I bought it at around $29 a share, which is really the sweet spot. Anywhere less than $30, I really like that stock. Okay, so with all of that out of the way, let's go ahead and transition out to the fun part of the video, what you've probably all been waiting for, and that is part three, what stocks I'm looking to buy heading into next month. Now, of course, AT&T will probably still be up there. I'll probably still be buying it. Anytime that it's less than $30, I'm a buyer of AT&T, but I don't want to bore you guys anymore with that stock. So we're actually going to talk about two other stocks that I'm interested in, and one is actually an ETF, and the other is a gaming related stock. Now, as always, I'll just give you guys a quick disclaimer that if the overall market was to tank and just kind of drag everything down, then of course I would love to just add to my core positions that I already own, some of my favorite favorite stocks, and also just buy some really big, giant, really solid companies like, of course, Amazon, Google, Microsoft, Facebook, and so on. But assuming that that doesn't happen, and also to make things a little more interesting, we're going to instead talk about one ETF and one video game related stock, both of which I would love to dip and go down so I could build them into bigger positions. But even at today's prices, they're looking pretty attractive to me, so I'm already kind of considering them. Okay, now one of those I'm actually starting to buy like literally right now at today's prices, and hopefully it drops more so I can build it up into a larger position, but let's just get this one out of the way because I'm already buying it. And that is the ETF that I was talking about, and that is the Vanguard High Dividend Yield ETF, ticker symbol VYM, which I actually talked about recently in one of my dividend related videos. And the reason I'm starting to buy this one is because the ETF itself is trading at an attractive price, already down over 13% year to date, and is sitting around the midpoint of its 52-week range, so a nice little dip there. It's a very low cost expense ratio. It's only a 0.06% expense ratio. It's very well diversified, with the top 10 holdings only making up less than 30% of the entire ETF. And if we went through the list, we'd actually find a lot of really stable, long-term dividend-paying giants like Johnson & Johnson, Procter & Gamble, AT&T, PepsiCo, Coca-Cola, and more. And finally, of course, the dividend that they pay is very attractive as well, at over 3.6%, with some decent growth to go along with it. So just an ETF that I really like. I'll be buying this ETF at this price or even lower. But for the second stock, I wanted to pick up another gaming related stock because the next generation consoles are going to be launching soon. That's the PS5, PlayStation 5, and the Xbox Series X. And I think that the combination of those the new console cycle, coupled with everyone staying at home right now and probably wanting to escape all the chaos and the negativity going on in the world, I just think gaming is going to see some strong numbers. And so I am kind of interested in researching some more gaming stocks. Now, keep in mind that this is already a gigantic market with close to 3 billion gamers spending almost $160 billion this year alone, representing growth of almost 10% year over year, according to Newzoo Research. Now, of course, an obvious play on this market would be just going with one of the well-established first-party big giant companies like Microsoft, Sony, or Nintendo, but I already own Microsoft, which I love. It's my #1 largest stock. I'm not a huge fan of Sony myself, and then Nintendo tends to be super cyclical, so I don't really want to jump into Nintendo yet, although I probably will own them again sometime in the future because I do like everything they do. But instead, though, I'm actually looking for a more pure play third-party developer and publisher, and for that, the three largest and kind of most obvious companies are probably Electronic Arts, Activision Blizzard, and Take-Two Interactive. The only problem, though, is that they're all basically trading near record highs right now, so I'm definitely going to wait for a little dip, but if I get a small one this month, I might start nibbling. Now, let's just kind of run through these and I'll let you know which one I like the most. Now, starting with Take-Two, when looking at the top 20 best-selling games of the past decade, Grand Theft Auto is easily #1, and the franchise is also the second best-selling of all time, only behind Minecraft, and then they also have the 7th best-selling on that list in Red Dead Redemption 2 of the past decade. So I would love to own this stock, but the only problem is that, again, the stock is trading at a record high already, up over 400% in the past 5 years, and the PE ratio is sky high at close to 50. So I would much rather wait for a bigger dip between now and when the next Grand Theft Auto game gets announced, and then kind of ride that wave up. So let's keep going through the list and I'll let you know which stock makes more sense based on the valuation. Now, Activision Blizzard is super interesting, and it's actually a stock that I used to own myself, but unfortunately I did take a loss on it because I just didn't pay enough attention to the valuation, and it ended up costing me when they ran into hard times. But their Call of Duty games alone make up a whopping 7 of the top 10 titles and 10 of the top 20. So that's a huge amount of market share for them. The only issue I have with Activision is that other than Call of Duty and maybe Warcraft, I'm personally just not a big fan of their IPs. Although I will note that I am super pumped for the new Tony Hawk remaster, which I not to get a little nerdy on you guys, but I did have to pre-order that game because I really wanted that little fingerboard. I just think it looks sick. But the stock itself is pretty high at close to double their 52-week low. And just like Take-Two, the valuation is way up there with a P ratio of over 40. So another stock that I would love to own, but I'd have to wait for a very significant dip before I can even think about buying it again, as their sales growth next year is only expected to be 6%, so the price you pay is just way too high in my opinion. That, however, leaves us with Electronic Arts, and if any of you play video games, then you probably hate EA because they've done nothing but piss off gamers for years now, particularly through microtransactions and loot crates that try to basically squeeze every dime they can from you. However, that's helped kept the stock price much lower than the others, and objectively I think it looks the most attractive as a long-term investment when you consider the valuation. Now, they only had a few top 20 games over the past decade, but what I like about EA is that they have huge potential because of their amazing licenses, which, to be fair, I think they completely waste them in my opinion. But if they can just manage to turn things around, I think there's a lot of serious potential there. So, those licenses include virtually all sports leagues like the NFL, FIFA, UFC, NHL, and more. And they even own the exclusive license to Star Wars, which is a massive money-making brand. Again, EA has done a fantastic job of wasting that license, but with already created games across PC, consoles, and even mobile, with more games to come in the future, that license could be very lucrative if they can just kind of get their SHIT together. Again, probably not as an exciting company as the other two that we mentioned, but what stands out to me is the cheaper price. It's only up less than 100% during the past 5 years thanks to all of their negative publicity, and it's still trading at about the same price it was 2 years ago despite having a big rally this year. That also leaves them with a pretty good PE ratio, trailing PE ratio, of only less than 14, which is significantly lower than their biggest competitors. I mean, it's like not even close. You can see it on that chart there. It's much, much lower. Meanwhile, financials have been strong over the years, and they're still expected to grow sales by over 7% both this year and the next, which I actually think they could potentially surprise to the upside if they happen to announce any new big games, especially a heavy hitter Star Wars game that I know the fan base is dying for. Even a Star Wars Battlefront 3 without microtransactions would likely sell like crazy. Admittedly, Squadrons does look pretty lame, and I have a strong feeling that it's going to be a major flop, but we'll have to wait and see. And I know that it does take years to make certain games, but I'm just saying that there is a lot of potential there with Electronic Arts. Anyway, if we get a nice dip in Electronic Arts, I'll definitely be looking to add that stock to my portfolio this month, and I'll definitely be keeping a very close eye on it as well. Now you might be wondering, what about some other gaming stocks like maybe Tencent or Nvidia? Well, I happen to already own both of those. I love those stocks, love those companies, but I already have some pretty large positions in those, so probably won't be buying those at this time. But yeah, just want to throw that out there. I already own those two stocks. Okay, so I think that just about does it for today's video. Let me know what you guys think down below. Are there any stocks that you guys are looking to buy here in August or sometime soon? I'd love to hear about those stocks down there, and maybe I will feature them in a future video. Anyway, if you enjoyed the video, please consider hitting the like button. It really helps a lot, and it means a lot to me. Thank you for all the support, guys. It means a lot, and I hope you're all staying safe out there. Take care. I'll catch you in the next one. Bye-bye.